Why do we look for large weekly trends? Because they are much harder for forces that would like to manipulate the market to be able to manipulate those. Why? Because they're huge waves. Think about the ocean and how easy it is to splash water around. You can do that. And if you had someone in a small pool, you could probably make pretty substantial waves jumping up and down. But when you start talking about the ocean and you start talking about a big wave that is headed toward shore, it is hard to stop that force. That's why we look for big waves. That is the reason that we focus on weekly vertical crossovers. And of course, we then look to the smaller waves, the intermediate wave, that is the 2-day, and then the smallest wave we typically look at, which is the 4-hour, for again helping us find jumping in points. And of course, we want the 2-day and the weekly to be moving in the same direction before we start looking to that 4-hour chart for an entry point. Now, let's jump into the markets today. We see the S&P 500 is down for the day, as is the NASDAQ 100. Gold and bonds are up. As we look at the market itself, we can see that again we have a green candle forming. It's the first. Again, we're not finished with this candle yet. We've only gotten 2 days into it. So again, we are looking at it, but we're not calling the candle at this point. Things are looking all right. Derivative oscillator is about flat. Price percent oscillator, while not as strong so far as it was the prior week, it's still going up. So again, that looks decent. S&P 500 down for the day 0.51%, so just a little over 0.5%. We start looking at the 2-day chart, and of course, as we look at the top of the candles, we can see that they are topping at about the same spot right now. And so, again, price movement is above the 2-day, well above the weekly. Derivative oscillators gaining upward momentum. But you can see how, when we look at price movement on the Heikin Ashi candlesticks going sideways, that's what we see happening on the price percent oscillator also. And again, getting a little flat there on us. So we'll continue to watch. We're still above the red signal line, but getting flat on that 2-day, and price movement is just above the 2-day candle. We go to the 4-hour chart, and that's where we saw at the end of the day a crossover going down. Now, what does that mean to us? Well, of course, we've been waiting for a pullback, haven't we, on the S&P 500, so that we could jump in if things turn around and starts going up. Well, we have the crossover confirmed at the end of the day. If things pop over in the morning and start going up, then of course that would give you an opportunity to jump into an up trade on the S&P 500. Now, some of you might be saying, wow, this is getting a little long in the tooth, isn't it? We had a crossover all the way back in late January. How long is this up movement going to go? I don't know. I can't tell you. But if it keeps going, then we want to ride it. Maybe it's done. Maybe this is a portent of everything crossing over, going down. Could be. We'll just wait and see. But if indeed we see a bounce off the red signal line in the morning, or if it goes for a few days heading down and then moves back over going up, great. We'll look for a jumping in point as long as the 2-day and the weekly are still moving in the same direction. Folks, we keep it that simple. Is there anything about what I just said that you don't understand? If there is, then I encourage you to go to the training portion of chartingwealth.com's website and view some of our free videos that we have there. We have a plethora of them there on all sorts of subjects, trend lines, the price percent oscillator, derivative oscillator, Bollinger Bands, you name it. We've got trainings there for you, and they're all for free. Don't go through all of them at once. Take your time, get a notepad, listen, write things down, seek to understand. And if things are really confusing, shoot us an email, cw@chartingwealth.com. Now, let's keep pushing through the charts. We look at the weekly chart on the Qs. We see the derivative oscillators gaining upward momentum a little bit. Price percent oscillator still heading up. And we can see as we zoom into the weekly that we are peaking above the prior week. The price movement's just above the, we can see it's above 2-day trend line, nicely above the weekly trend line. We go from the weekly chart to the 2-day, and again, that's where we see things starting to get a little weak like we saw before. And again, we're just 2 days into a 5-day candle, and of course, we did complete this. Now, again, that's on the weekly chart. We're now on the 2-day chart. We did complete the latest 2-day candle. That has been completed. It's still heading up a little bit on the price percent oscillator, derivative oscillator heading up also. Price movement is above that 2-day trend line on the 2-day chart, well above the weekly. We go to the 4-hour. Now again, we can see where things have been sliding sideways since they topped in the afternoon on Monday. So red spinning top in the morning, doji in the afternoons means started off with indecision in the morning, lots of indecision tending down in the afternoon. So keep your eye on things. Just because the 4 hours crossing over doesn't mean you get out of the trade on the cues. It means you remain cautiously optimistic. Remember, once you enter a trade, you go from the 4-hour chart to your bigger charts and let them help guide you. Right now, they're not looking as iffy as the S&P is, but we're not in a trade right now in the S&P. We are on the cues. Things are still looking all right. Pay attention to what goes on in the morning, what goes on in the afternoon. Warning bells will start sounding if the 4-hour chart blows through the 2-day trend line, particularly when it blows through the weekly trend line way down there. We don't want that to happen anytime quick. But pay attention to what's going on also with the 2-day chart. If it starts to weaken and crosses over going down, then that's typically a sign, unless the weekly's super strong, that you might wish to pull your trade. But again, it's all right now. It's a little flat. Just watch, see what you see, all the charts all the time. Use all the charts all the time to help you make up your decision. But again, you can take your profit anytime. We jumped in on at a nice time on this trade, and again, we've had a nice run up. I mean, it's gone up several dollars on this, at least $2, if not more than that, on this trade. So again, you've done fine. You can take your money and take your virtual dollars and call it a deal, or you can, again, continue to watch and wait, see what's happening. You can get rid of part of your position and take some profit. You could get out a half. I find myself over and over looking for points where the market's hit before or certain levels of profit I would like. I then sell a third or a half and then stay in and see how much longer I can ride it. That's for you to determine, to think about, to do what you want to do with your own trade, and to practice those kind of things and think about them. You don't have to ride the whole trade the whole time. Okay, that's where we are on the cues. We're going to leave stocks now and go to bonds. Bonds are up for the day 0.32%. Now, as we look at the weekly chart, of course, it is just pushing through that weekly trend line for the week. We see that we're still in positive territory. The price percent oscillator is trying to head down. Derivative oscillator still green, losing some momentum. We look at the 2-day chart and, of course, trying to recover, pushing above that weekly trend line. Still headed down on the price percent oscillator, derivative oscillator losing momentum, but still positive. Again, hasn't crossed over, going down. And of course, what's going to happen with bonds? Are we going to bounce off that weekly trend line and start heading up? We're watching, paying attention, seeing if this 4-hour chart crosses over going up. If it does in the next day or two, the 2-day and the weekly are still in confirmed up moves, you can do a practice up trade on bonds. So pay attention. Keep watching, at least check twice a day. Look toward the end of the day, look toward the middle of the day, the charts that you are interested in following. So that's where we are on bonds, the potential to jump into something there. Now gold. Gold is still in a confirmed down move on the weekly chart. Price percent oscillator still heading down. Derivative oscillator is flat. We have a green up candle that's forming. And when we go from the weekly to the 2-day, this is where we see that, and again, we talked about this going into all of this. We talked about the potential for a break being put into this trade because of the 200 period moving average line. This is a great lesson, as we've talked about the whole time, to be able to see potential floors or ceilings if it was the other way, if this was above and was keeping gold from going up to a certain amount. But we can see the 200 period moving average line on the 2-day chart has become a real floor to bounce off of. Gold just won't go below that 121 mark, just won't do it. Is bouncing off of it. Now, it's not crossed over going up yet. It's trying to head up. The 2-day trend line has been violated, but we see that we haven't had a crossover going up on that 2-day chart yet on the price percent oscillator, and the derivative oscillator's still negative. Why? Because we had 8 days of strong down movement. We have 2 days now of up movement in gold, and again, we'll see how much more gold goes up. What do we see going on the 4-hour chart? Well, we saw it again bounce off that 121 mark, and for the last few days heading up with a couple of pullbacks. We saw some weakness toward the end of the day, still up 0.5%, but interesting to see how things sort of slowed down there toward the end of the day. We'll continue to watch and see if indeed gold is going to rotate back over going down, and if it can pierce that 121 mark. If it does that, then we'll start looking for where it might run down to. We sort of have a hard bottom there in gold at about 112.50. And again, if indeed it can punch through that 121 mark, we might see more happen. That's where we are right now as we end the day on Tuesday, go into Wednesday. And again, if you haven't purchased our book, please do so. You can purchase it by just looking in the show notes and following that link. If you happen to live overseas and would like to get our book, we will send it to you. I'm afraid you can't order it at that link. If you will just write us, cw@chartingwealth.com, I'll send you a PayPal invoice. You can pay that, and we'll ship your book wherever you live in the world, as long as you can get mail. And again, if you're a Patreon supporter, thank you so much. If you want to help us here with the work we do, become a Patreon supporter. We have all sorts of benefits depending on your level. Everybody gets to participate in the monthly Q&A, plus we do a chart review for our members. If you're in that intermediate level, you get a free book in addition to a once-a-month telephone call, 15-minute personal telephone call with you. And again, we appreciate all of our Patreon members. We appreciate all of you so much. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.